So I'm going to share this article with you. This article highlighted the common problems facing retail investors. Okay, the most common problem is they tend to sell winners too early and holding on to the losers for too long. Okay, that means if you are winning, you only win a couple of hundreds, but every time you are wrong in your analysis, you buy a stock and you start to lose in the thousands. Can you see, by winning in the hundreds and losing the thousands, you are going to be net losing. Okay, so you need to figure out how can you still make money if you're going to lose more times than you win in your investment. Okay, so the answer is reward to risk. Every time you place a trade, okay, you buy a stock, your risk should be less than the potential reward that this investment is going to give you. Okay, take a look at my table over here. So we are talking about a 3-to-1 reward to risk ratio. That means if you have 10 trades, you have 7 losses and 3 wins. Okay, out of 10 trades, it's only a win rate of 30%. Okay, which is very lousy, am I right? 30% win rate is very lousy. Okay, but if you have a risk reward of 3-to-1, you're still going to make money up $200. But if you have investment trades, investment opportunities that give you a 5-to-1 reward to risk, right? After this 30% win rate, you're going to make money up $800. Okay, let's say every time you lose, you're going to lose 100. Every time you win, you're going to win 100. Okay, every time you win, you're going to win not 100. So sorry, every time you win, you're going to win 300. Okay, here is 300. Every time you win at 5-to-1, you're going to win 500. Okay, so when you win more. You lose smaller. So when you go to the 8-to-1 reward to risk ratio, you will see that every time you lose 100. Okay, every time you win 800. So your net profit after 10 trades, okay, which you only have a 30% win rate, you will be making $1,700. So during your investment journey and when you're doing investment, it is very important for you to focus on reward to risk. You shouldn't be interested in punting the market, going for the few hundreds of dollars. What you want is every time you place an order for that opportunity, what is your reward to risk? How much are you going to make from this opportunity? So the higher your reward to risk, the more money you're going to make. And this will make your retirement savings account grow. Okay, it will outgrow your retirement expenses. That is the key idea over here. Okay, so today I'm going to share with you one particular instrument that will allow you to win a high reward to risk ratio. Okay, every trade you place. So this is called options, US options. Some of you may have heard about US options before, and you are too afraid to try because you hear all the very difficult terms like credit spread, debit spread, and also the iron condor and so on. So to you, wow, sound very complicated. But guess what? To make money in options, you do not need to do complex strategy as such. You can start easy. Okay, start easy. But before I share with you what is the easy way to start using options to trade, all right? So I want to highlight to you why options provide very high reward to risk ratio. Okay, now let us understand what one call option or put option do and what do they mean. One contract of an option, okay, control 100 underlying shares. Okay, so if you think a stock is going to go up, you should buy call option. If you think a stock is going to come down, you should buy a put option. Okay, that means you can play both ways of the market. So imagine if you are only buying stocks, what happens if the stocks decline? You must know a way to make money from that situation as well. So that is what we call buy a put option. That means we are betting that the share is going to go down within 1 month, within 3 months, within 6 months. All right. So when the share price really goes down, you actually make money. Okay. Now that is something called the expiry date on each option. So how does it look like? If the stock is going up, you will be probably buying this option chain. Okay, so this ARRY is a US stock. This is what we call the stock symbol. This 20 SEP 19 is the expiry date of the option. That means by this expiration date, wait, before I explain expiration date to you, let me explain the rest of the option chain. So this 35.0 is what we call the strike price. If you see a C over here is the call option, which means when you buy this stock ARRY, you expect the share price to go above 35 US dollar per share. Okay, by 20th of September 2019. Okay, this is an old screenshot I took last year. Okay, so what it means, if ARRY by 20th of September 2019, the share price is above 36, above $35, that means it is trading at 36, 37, 38, or even $40, I am going to make money. Okay, very simple. I'm going to make money. But if the stock price on this date trades below this level, I am going to lose money. Okay, so this is in a nutshell what this option provides. Okay, and if the stock is going down, okay, coming down, this is the symbol SBUX, a very popular stock called Starbucks. I think most of you would have heard what is Starbucks and probably purchased a coffee before. Okay, and this is the expiry date. This is 86.5 is a strike price. P is the put. C means call. P means put. That means if you think Starbucks price is going to come down by 6th of March 2020, okay, and you're going to go below 86.5, then you buy a put option. Okay, you buy a put option, right? So this is what call and put option mean, and what does the expiry date do for you. Now let's take a look at this example over here. Now what I have done here is a trade on Starbucks. You can see Starbucks, I am buying a put option. Okay, put option means that I want the share price to go below $86.50 before 6th of March 2020. Okay, so when I buy this contract, this was the date, 21st of February, 10:38 p.m. This is Singapore time, so 10:38 p.m. So two contracts, okay, two contracts. And this is the price of one contract, $1.07. Okay, $1.07. So I buy two contracts, so it will cost me $214 deduct from my trading account to pay for this put option that I bought. Now this is the commission. Okay, so you add the commission up. So this is the total cost of owning two contracts of a Starbucks 86.5 put option. Okay, so this is where I bought this put option. I'm betting that Starbucks is going to go down. Okay, Starbucks is going to go down. So when Starbucks gaps down, all right, on this date, look, I exit the stock, I exit the trade 3 days later. Okay, the same option chain, I own two contracts. So I sold two contracts, -2, I sold two contracts. What is the price? $3. Okay, $3. I sold each contract for $3. So I collected $600 from the sale. So if you minus what I have paid earlier, 214, I make a net profit of $386 just based on this trade. Okay, just based on this trade. So you can see my reward to risk is 3 times, okay, $3 divided by my cost, 1.07, and I get 2.8 times. Okay, 2.8 times. So you couldn't get a very such a high risk reward if you just buy the stock directly right here. See, if you buy this stock at where I bought the price, okay, the upside, okay, the risk, if I were to cut loss, 3% away, and if I were to take profit, 3.9% away. So you see the risk reward is more on using options. Okay, reward to risk is better when you're using option, and the low cost to it as well. Okay, we're coming to the cost. Now, we talk about risk. Why trading option has got limited risk? Okay, you are protected. Now, let's say Starbucks is trading at $88. Okay, so $88, you buy 100 shares, will cost you $8,800 cost. So you pay up for the shares and you own 100 shares of Starbucks at $88. Now, if Starbucks dropped to $70, okay, you decided that $70 too painful, you think it's going to go down further, so you decided to sell away Starbucks. Okay, so you sell the 100 shares away, you will lose $1,980. Okay, $1,980. So what if we use option? So I buy one contract. Okay, I buy one contract. One contract is worth $1.07. So if I buy one contract, because one contract control 100 shares of Starbucks, so I have to multiply by 100. That gives me 107. This is my cost, $107. Now, if Starbucks from $88 goes down to $70, okay, $70, which means my option from $1.07, it go to zero. Okay, go to zero, because for whatever reason it didn't go up, it comes down. I sell away this contract, I only lose $107 because that is all my cost. $107, that is all my cost. Okay, now the thing is, if Starbucks you buy at $88, something happened to Starbucks, okay, and it has to liquidate, bankrupt. Every share from $88 now is worth $0. You lose 100%. How much do you lose? $8,800. But I am only owning the right, the option contract, the right to control 100 shares at a cost of $107. So if Starbucks goes to zero, from $88 goes to zero, I only lose $107. Can you see the limited risk here if you were to use option compared to you buy the shares outright at $88 per share? Okay. Now, where do we get all these trading ideas? Now, you can get it from news catalysts, using trading signals from the charts like technical analysis, or you use fundamentals like McDonald's, Microsoft, Google, Amazon, Baba. You think that, wow, e-commerce is the next in thing, so you use fundamentals to justify to buy. Okay, so based on the three generation channels, idea generation channels, you will first decide whether the stock is going to go up or down. Now, if you think the stock is going to go up, you buy call option. If you think the stock is going to come down, you buy put options. That's all. Very, very simple. Okay, very, very simple. Let's take a look at this Starbucks example once again. So the date is 2020, January 29. Okay, January 29. So this news reported that because of the coronavirus, Starbucks closes 2,000 Chinese branches. Okay, so the revenue and the earnings of Starbucks is going to be affected because it couldn't operate these 2,000 Chinese branches. So the share price should come down. Okay, the share price should come down. So this is the same Starbucks trade I took. So just want to go through the calculation with you. So entry price of options, $1.07. Okay, you pay $1.07 to control 100 shares of Starbucks, because you buy two contracts. So your total cost is $214. Starbucks, okay, at $86.50. So let's say you are buying Starbucks at $86.50 per share, and you go and buy 200 shares. Your cost is going to be $17,300. Okay, versus I'm only interested to control these 200 shares for a short period of time. My cost is only $214. Now remember, if Starbucks go to zero, you are going to lose $17,300 based on the 200 units, while I am only going to lose my all $214. Can you see? Lower cost, lower risk. Now, limited risk, there you go. Cost equals to $214 equals to my maximum loss. So this is the 200 shares at $86.50, okay, per share. So it's 17,300 maximum loss. So remember, by using option, your maximum loss is limited. Okay. Now, next stock. June 18, 2019. Okay, Pfizer to buy Array BioPharma. Okay, so this Array BioPharma is a stock. It's going to be taken over by Pfizer. Okay, so this is how the share price looks like. So this is where the news is announced and the stock gaps up. Okay, gaps up. So it gaps up a whopping 61.9%. Okay, 61.9%. So assuming you only have $600 to invest, so you can only afford to buy Array BioPharma, okay, 20 shares, okay, 20 shares at $28.80, and then you sell this 20 shares at 46.44 right here. You buy at 28.80 and then you sell at 46.44. So you make a profit of $352, which is about 61%. Okay, 61% return on investment. But what if you use option? Okay, so this is the option trade that we took. So I'm going to show you how to do it. So we have $600, right? I say assuming you have $600. So this is the $600. So we buy 5 contracts of Array BioPharma at a price of 120 per unit. Okay, 120 per contract, not per unit, sorry, 120 per contract. So 120 per contract, I have 5 contracts, $600. So I'm controlling how many shares? 5 contracts of these options, 500 shares. Okay, 500 shares. So when I sold, okay, when I sold my 5 contracts at 11.90 due to the big gap up, okay, this is my proceed. Okay, this is my proceed. I mean, this is my sales. So if I minus my cost of 600, I make a total of $5,350. Take a look at this. If you buy the shares outright, not the option, but the shares outright, you're going to make only $350 with $600. But if you use option, okay, the same $600, you are now making $5,350. So how did it happen? Let's go through. Cost is 120 per contract. So one contract control 100 shares. I've got 5 contracts, so my cost $600. Now profit, okay, is 11.90, which is my selling price, times 100 times 5 contract, because one contract control 100 shares and I've got 5 contracts. So this total amount minus 600, 5350, a 790% return on investment if I use options. So you can see by using options, we can win big and risk small. Remember the first few slides I talked about reward to risk. The higher, the bigger it is, your chance of growing your retirement account is higher. So this is why option is an instrument that you should use, okay, to trade the US market. So let's try one more example. Let's try this Fastly stock, okay, spiking. It's going up, okay, because the shares become scarce, okay, scarce. So this is the trade on Fastly. So you buy one contract of this Fastly call option, strike price 25. Okay, it's going to cost you $145. Okay, because one contract is $1.45. So 100. Okay, one contract control 100 shares, so you have to multiply by 100. So your cost is 145. Okay, and then we sold it at 944. Okay, because the stock went up. Okay, the stock went up, so we managed to sell it at 944 per contract. Okay, I have got only one contract, so multiply by 100, I get 944. So my total profit on this Fastly trade is $799. Let's take a look. Okay, cost 1.45 times 100. Okay, one contract 145. So my profit, okay, 550% ROI. So that is about 5:1 reward to risk ratio, which is fantastic. Okay, which is fantastic. Now, lower capital requirement. Okay, let's take a look at this portfolio of options over here. So you can see this is a screenshot of my account, which at that time I was controlling 1, 2, 3, 4, 5 instruments. Okay, I have got call, I've got put. Okay, I have 3 calls and 2 puts. Right. So let's go through lower capital requirement. So the traditional way, if you were to go and calculate the like $86 strike price, you multiply by 200 units. You got 2 contracts. Okay, if you add up all, it will require a hard cash of $41,900 to control these 5 instruments. Okay, these 5 instruments, these 5 stocks. Okay, but if I use the options way, okay, you can calculate my average price over here. Okay, if you add it up, it only cost me $1,708 to maintain and control these 5 instruments. Okay, and if I use capital of $1,708, my profit, okay, this is my profit. So when I add up all my profit, I am making $1,115, sitting on a return on investment of 65.2%. Without the option having to run too much, I am already making 65% based on this particular portfolio of 5 stocks. Okay, so you can see option really has got higher ROI when you get the direction correct. Now, every time you place a trade, there can only be 5 trading outcomes. Okay, so by understanding this and combined with the knowledge that you already learned from me about the reward to risk, the higher it is, the more profitable you're going to be, right? You understand how to make money from the stock market. So the first one is called the big win, small win, break even, small loss, and big loss. So in order to make money in the stock market, you should always avoid big loss. Now, based on the 4 outcomes above, can I say that if you only trade these above 4 outcomes, the small win, break even, and small loss will take care of themselves. When the big wins come, the 5:1 reward to risk ratio, the 8:1 reward to win ratio comes in, it's going to make you more profitable. Okay, when you take a big loss, it's going to drag down your account. So in order to make money from the trading, from stock market, make sure you only stick to the 4 above trading outcomes. Now, why do most traders fail? Okay, now either they don't have enough knowledge, okay, to trade the stock market, because as you can see from my example today, you do not need to know a lot of complex option strategies that puts you off, that wow, so difficult to execute, you do not know what the hell is going on. So you either spend a lot of time trying to figure out and find a lot of obstacles, okay, very difficult to learn, and therefore you do not acquire the important knowledge for you to trade the stock market, invest in the stock market successfully, or you may not have enough time. Okay, you want to live your life, you have to go to the work, and after work come back to your home, you have got children at home, or you have to go and work, study part-time, so you got no time in the evening to further learn up on this US option, this trading. Okay, or worse, the US time zone is not in your favorable time in your country. Okay, that means when the US market is trading at 9 a.m. their time, 9:30 a.m. their time, it could be at night your time. Okay, from where I am in Singapore, it is 9:30 p.m. Okay, 9:30 p.m. and the stock market closed at Singapore time 4 a.m. Wow, how do I stay up all the way to trade a US time zone? Okay, so that is a way to do it. I'm going to share with you later. Okay, and the other one is some of the traders are too emotional. Okay, that means they cannot handle the big swing up and down in the stock market. When it goes up too much, they scared the profit is going to go away, so quickly take profit. And then the next time when the stock comes down, they are too scared to run out of the stock and suffer big losses. So these are the 3 reasons why most traders fail. And today, okay, I have something, a product that can help you be successful in trading despite you with no knowledge, not enough time, and also you cannot control emotion to help you, okay, to make money in the stock market, to prepare your retirement fund. Save time. I'm going to send you a solid share research, okay, on stocks that we are going to trade, that I'm going to trade, that we are going to trade. Okay, so this sharing is done on a daily basis. Like whenever a trade is taken, okay, you will receive the trade done alerts, okay, from my system. That means you will be able to receive this in your mobile phone, okay, whenever a trade is done, okay, by my system, so that you will know that, oh, Goldman Sachs. So today our system traded Goldman Sachs at this strike price, this option. So you can take it as a reference, and then you quickly go to your charts, and then you go and look at the chart and see whether is it a buy to you as well or not. Okay, or you can just follow the options idea that is given inside this channel, and then you duplicate the trade by yourself. Okay, so this is one way you can use it. Now the other one is to help you eliminate emotions. We have come up with this platform, this product that will provide a trading service for you. Okay, a trading service for you. Now, how does it work? We are using Interactive Brokers. Okay, later I will share with you who is this broker, and only this broker. So if you want to use this platform, you have to use this broker. Now, everybody will have your own trading account. Okay, so once you open your trading account, you have my platform, 24 hours trading platform. All you need to do is to log into the two platform at night. Okay, at night. And then whenever our system take a trade, okay, it will push. Okay, you take a trade in Interactive Broker, it will push the trading platform, and then your trading account, after you log into both platforms, will automatically place an order in your account. Okay, place an order in your account. Therefore, you do not need to take part in the trading decision making process. You do not need to click the buy and the sell button anymore. The whole thing is going to run for you. Okay, a trading service. Now, who is Interactive Brokers? Who are they? They are a US-based broker. Okay, they are very well known for their $1 commission per US option contract. Okay, the other popular one is known as a Think or Swim. So both of them, Interactive Brokers and Think or Swim, are very well known in the world. Okay, so they are US-based broker and they are regulated and licensed in US. Okay, well known for their $1 commission. Okay, and they are listed in NYSE, New York Stock Exchange. Their stock code is IBKR. Right, the advantages of using this is everybody control your own individual account. Okay, so it is not putting money with a company and then the company has a chance to run away with your money, or or suddenly do shit with your money that you cause you to suffer big losses. No, everybody has your own individual account. So how much you fund is also up to you. So you can control your own trading. Okay, you can turn it on, you can turn it off. Now, and this is one, anytime start, anytime stop. Okay, so you have got your advantages such that you can stop the system from doing this trade service for your account. Okay, so this is the advantage of using our platform. So this 24 hours platform, you can do three things. Okay, number one, you first select your capital size, and then you can turn on and off your system. Okay, so that if you do not want to use the trade service tonight, just turn it off. Then it will not take any trades for you. But when you're in the mood, you want to participate in the stock market, you turn on. Okay, then whatever our system trade, your account will follow the same trade. Okay, from opening of trade to closing of trades. Okay, and that auto places the trades. Now I'm going to show you a demo how it works. Okay, just give me one moment to open up the software. Sorry, I may need to get out of this screen. Right here. Okay, very good. Here, and there you go. Okay, first you need to install this Traders Workstation. Oops, this is the wrong one. Yeah, one moment, please. Okay, this is the Traders Workstation, IB Gateway. Okay, IB Gateway. You have to install this IB Gateway, which is Interactive Broker software, and then you log into your trading account. So I'm using this live demo to show you how it looks like. Log in. Okay, and it will send a 2FA to your mobile phone so that you can verify your password. Okay, log in. Okay, once it's logged in, you will see that the status is connected. Okay, the status is connected. So very good. All is well. Minimize it. Do not close it, but only minimize it. And then we will go to, okay, then we will go to our software. Okay, this 24-hour software. Okay, download and install. So I'm going to log in. Okay, you have to read and agree to the terms and condition of use and accept. Okay, this version has been a new version will have been released. So click OK to download. Okay, so I'm going to download the latest version. So you can see if there is a new version, everybody will be using the latest version. Okay, so I'm going to install right now. Done. Finish. Okay, so it's going to launch. Log in again. Understood. Oops. Log in again. Understood. Accept. There you go. It's launched. Okay. When you see status connected, what does it mean? It means that it has successfully connected to your Interactive Broker account. Okay. You can see connected. Connected. Okay. Connected. Okay. So once it's connected, this is the on off. So if I turn it on, right, the robot will connect to TWS, okay, which is this software, and will trade based on your following capital amount, 5,000, confirm. Now, if I don't want to use 5,000, okay, this is where you put the follow capital, you click edit, then you can put the amount that is available in your trading account to let the system trade for you, okay? And you leave both the software online throughout the US trading session. You are done. That is all it takes. Okay, that is all it takes. I'll come back to my slides. All right. So important notes to understand how this system works is it is only taking a 1 to 3% equity risk per trade. That means if one stock or one trade idea is wrong and you have to cut loss, it is only risking 1 to 3%. Okay. And you must have a trading account with Interactive Brokers. Your minimum funding size should be 5,000 in order to copy most of the trades that our system is taking. Okay, any amount that is smaller, like 2K, 3K, you will not get most of the trade because the stocks that the system is trading may be too expensive for your account. Okay, the option that you are trading may be too expensive for your account and you're unable to follow. Right, so the minimum for everybody is at US 5,000. Now you need a stable internet connection throughout the whole US trading sessions, and you need to run these two software concurrently throughout the night. Okay, leave it running throughout the night. Okay, so you can either use a laptop or you can use a personal computer, desktop. Okay, it's up to you. So, but it's important to leave your laptop running throughout the night. So you probably need to shut down all the Windows update, the what you call that, the Hibernate on your laptop, or any power management system that will put your computer to sleep during this time, right? You need to turn them off, okay, so that your computer will run. It is just like you yourself is sitting there and trading the US market, okay? Just that you are in your room watching Netflix, or you may be in your room sleeping throughout the night while your computer is working hard for you, trading the US market, okay? So due to different capital size, okay, like I said before, you may not be able to take all the trades that the system is taking, okay? So, but most of the trades should be taken if you have a 5,000 account, okay? Now, how much is the subscription? Okay, we have got 3 packages for you to select. Under normal package, okay, it is a 3-month software subscription. So you can sign up for it, or if you sign up for the 1 month, okay, you can see that the amount per month is actually lower, 167. And if you sign up for a 1-year subscription, okay, it is only $1.33 per day. Okay, $1.33 per day. So after you sign up, you will receive the trade system, access to the trade system, as well as the daily trade ideas broadcast through an app. Okay, so let me bring you to the website and take a look. So this is the URL, www.24hourstrading.com. So you probably want to take note of this URL and then go there, okay, and then subscribe to this wonderful platform that can help you trade the US options market automatically. Okay, now let me bring you to the actual website and let's take a look. Oops. There you go. Okay, so this is the main page. So we give you an overview now. This is the trading performance of our system as compared to the S&P 500. Okay, so you can see the S&P 500 this year is not doing well, it's dipping. Okay, but our equity in the system is still growing. Okay, since 2018 until now, it is still outperforming the S&P 500. Now, do we lose? Okay, yes, there are drawdown months. Okay, they are drawdown months, but generally you can see that it is an uptrend. That means we are winning over a longer period of time. Okay, so this is the performance that you can see from our website. Okay, and there are videos over here, okay, for you to understand how do you connect the software right here, how to install. Okay, so after you have successfully subscribed to the system, okay, then this is where you come in and then do your setting, how to set up, okay, right here. Maintenance setting on the Windows, we also share it with you so that you know how to set up, okay? And this is the pricing once again, right? It's less than $1.99. There you go. The three plans for you. So if you want to try for the normal package, which is 3 months, okay, you can choose 3 months, 6 months, or 1 year subscription. Okay, and your laptop specs is right here. Okay, so subscribe for the trading system, and I hope that you can join us in making money from the US options. Okay, thank you very much. We'll see you at the next video.
Please subscribe our YouTube channel and open the bell to get the notification of our new video. Also like and follow our Facebook page.